Alrighty, guys, welcome back to the Masters series. Learning how to actually become a day trader and actually do something that's really very hard to do, but do it in the most simplistic way ever because your boy is going to teach you how to do that. Everything good doesn't always have to be complicated, all right? And today we're going to get into, I'm going to just do a mix of trends and liquidity because they kind of go into with each other. So um, today's video will be focused on trends and liquidity. So, what a basic trend is I'm sure we all know what a basic trend is. Let's figure this. A basic trend, right? Higher high, lower low, higher high, lower low, right? That's just a basic uptrend, right? So something very easy, we'll just mark this as an uptrend. Where's the thing? And then lower low, higher high, lower low, higher high, lower low, higher high. This is a downtrend, right? Down. All right. So you have an up and down trend. These are like the most basic like way of thinking that you can ever do with day trading, right? So up and down trends are very subjective. Obviously, they're going to look differently. They're not going to look like this every single time, but the way we use them is you want to enter here, here, here. You want to enter there, there. You get the idea, right? So let's try to spot a few, right? Okay, so usually I like to go on to like to the 15 minute. They're very easy to see on the 15 minute. The 5 minute is also pretty easy. It just allows for a little bit more of like a day trading structure. So I like to enter on the 5 minute a lot, but 15 minute just kind of gives me more of a clear bias. And especially when we're chopping like this, it's very easy to see on a higher time frame as well, just so you know when to stay out of the market, right? So for example, right here, we are a very clear downtrend, right? We're making that lower low. Here, let's mark it out. We're making that lower low, higher high, lower low, higher high, lower low, higher high, right? That is a downtrend, right? And then, this is kind of just chop. We're not going to really focus on that. But over here, what is this, right? Very basic uptrend. Lower low, higher, or higher low, higher high, higher doom, 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 doom. You can very tell that we're in uptrend, right? And then you can just start seeing it everywhere. Downtrend, uptrend, downtrend. And so that's just the way the market moves, right? It's just very basic on, the market can't always just move in a straight line, right? You'll never, ever, ever see a market just do this, right? That's not possible, right? A market has to do this to rebalance, right? Because a part of the market and its structure and its algorithm of working is that it needs to rebalance, right? It needs to go back into a discount so it can move out, right? Because like let's set an example. When you buy something, you want to buy it really cheap, right? You want to spend the least amount of money on it, and then say in about a year or so, you want to turn it into $100. Say you buy something for $25, you want to turn it to $100. Are you going to sell it at 50 or are you going to sell it at 100? Right? You're going to sell it at the most premium price that you can, so that when you're selling it, you're making the most amount of money on it, right? So that's just what the market does, right? With shorts and longs, it wants to go back into like discount, for example, like this goes back or pretty close into the point 0.5, which is equilibrium, which is a discount, and then we move out, right? So that's what the market does with these trends, right? I mean, on the bigger time frame, right? Like we see this downtrend, you're like, okay, yeah, we're trending down. I see. What naturally the market has to do now is go back up and fill that range, right? Because here's discount, here's OT, which we'll talk about in a little bit of a later subject. But you can tell that it needs to go back into discount before it can actually start moving again, right? Boom. Look what happened again. We have this big, big downtrend, right? And yes, you can catch entries in here, blah, 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 blah. But to see what I'm talking about, here we go. Point 0.5 right here. We enter discount, right? And now we're starting to move out. So it's very important for the market to move in these trends so that they rebalance while they're doing it, right? Even on the lower time frame, right? Even down here, right? We have this leg. It's not gonna just. It's impossible for it to just go like this the whole time, right? And just keep going down and down and down and down forever until it decides to just do this, and then it just keeps going up and up and up and up forever, right? That's stupid. We need to rebalance what we are doing. So very close to point 0.5. It's probably on the 5 minute actually. I don't know where it went. Fuck. Oh, here we go. Yeah. This leg rebalances to point 0.5 right there, and then we get our move, right? So that's just how we operate in trends. Trends are used to rebalance and take liquidity, which is what we're about to talk about right now. So liquidity is a very, very easy concept. It's just made up of highs and lows. So I'm gonna call it this is shortened for liquidity. It's just highs and lows, right? That's all they are, right? Recent highs and low. You can go recent, old, just highs and lows, right? Now, equal highs and relatively equal highs and lows are like magnets. Okay, so let's have that there, and let's go see what I'm talking about. So, so high would have to be high and the low, right? This would be your high, right? Vice versa, this would be your low. Now, to easily see that, right? We have we have a oh shit. We have a high, then we have a low. So fuck, your high would be this. Not this, because that's not the high anymore. This is still the high, right? So your low wouldn't be this, right? Because up candle, down candle. Two opposite candle colors make up a high or a low, right? But this wouldn't be your low. It would be this because it's the lowest low, right? Or no, actually, sorry, it would be this. Actually, I just have no idea what the fuck I'm talking about. It would be this one, right? Because it's your lowest low. So you can't have a low. I mean, yes, these are lows and they're relatively equal lows like we were talking about, which is why price came back and retook these. But in very basic nature, this would be the low that you would target because it's the lowest one out of there, right? So here it is again, right? You got your candle high, candle low, right? Or up candle, down candle, highs at the top, right? Here we go here. Boom. Now these are two down candles, yes, but do you see how we make a bullish candle after that? Now that would be a low right there. And it's very, very simple. Boom, right there. Most recent high. Here's a high, right? Here's the highest high, which you see we took. This would be the highest high again, which we took, right? It's very easy. It's just down candle, up candle, or up candle, down candle, right? Very, 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 very easy. Look, high right there. It's just the ones that stick out, right? Because, like, yeah, you have all these other ones in here and stuff like that. And, you know, but you can use these for targets, right? So, what's very easy about these is that we can use them for targets, right? So let's go back to the 15 minute and go back to what we were talking about. So say okay, yeah. All right. This is like New York, right? All right, we're in a downtrend here. We realize we're in a downtrend. And you're like, "Oh shoot, I see these lows down here, right?" Boom, we got these lows. We got these lows and we got these lows. So they're pretty you would say they're pretty equal, right? So the market likes to come down to equal lows, relatively equal lows, and take them. Especially like right over here. Do you see how many lows there are over here? See what the market did? We went and took them. Because people, the reason why liquidity is a thing is because, people are entering here, right? And, just because the market, boom, like do you see all people enter right here, stop losses, bam, 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 under the lows. So under the lows would be a stop loss. The market needs to make money too, right? So if you're the market, right, and you need to make money, right, and people are getting in long at this low, you'd want to go and take the lows because then you're getting paid, right? And then we flush through these lows. So it's very, very, very easy to see. Now, which one's going to be hit is based off your bias, but like you can even see it right here. We take these highs before actually moving down so we can make some money in the discount and then go shoot down and use our real move, right? So right here, boom. We took all these highs before moving down. We took all these highs before moving down. It's like a repeated pattern. Took these highs, didn't take that one, but we took those highs, right? And then we keep taking highs and moving down and taking lows and moving up, right? We took all these like look at how many lows we took here, just by this one sweep. So that what we call that's what we call a liquidity sweep, right? Because we took all of this liquidity. So we're stopping all these traders out. We're stopping all these guys out that are going long, taking their money, and then actually showing the real move because we made all our money. So that's very basic. And what you can do, which is a good strategy, I know TJR really likes to use it, you can just mark here, let's go to like, you can mark the 4 hour and 1 hour highs and lows, which are really easy to see. Um boom, like you have one right here, and just wait for a liquidity sweep, right? Like let's see what happens. Okay, so we took that liquidity. Now you're like, okay, sweet. I'm gonna look for like you know, I don't know. Say it just lined up with one of your confluences and you went long and cool TP at blah 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 wherever, right? You would hit TP because we took out all those stop losses and now it's showing us the real move, right? So it's very simple, and that's just an easy strategy you can implement. That works quite well, yeah. So just make sure when you're taking a trade that there is some form of liquidity sweep. They're very easy, but they're very powerful, right? Like you're like, oh, why didn't we react off this leg? We just needed to take these highs before actually reacting, right? So it's something you overlook a lot, but once you actually start implementing, it's very, very easy. Like right here too, we had to take these lows before moving high. We could have just used that, but we didn't, right? We had to make some money first. So just as an overview, uptrends are, oh my God, higher highs, lows, higher highs, lower low, or higher lows, higher highs, higher lows, right? That's an uptrend, and then a downtrend is lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Boom. Very basic up and down trend, right? You can very easily see that. And liquidity are these highs that the market keeps taking. Boom, 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 right? So a very, very easy strategy that I shouldn't even give out because it has so much sauce in it. So do you see where we started the trend, right? So we started our uptrend right here, as you might be able to tell. Boom, 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 right? We started our uptrend here. This target right here is very, very, very important because it completes the sell model, right? So you can see on this curve, let's give her a look see here. Uh, oops, wrong way. Okay. Boom, we have an uptrend, and now we have, dude, I suck at drawing this shit. Holy, now we have a sell model, right? And the sell model, the sell model's target is this low because we started the uptrend here, right? Or if you scroll out to the 1 hour, we really started the uptrend down here. So our real target was this low, right? But just like as a day trader, I mean, it's good to know that's the actual target, but you can kind of get away with using the 15-minute and 5 minute and stuff like that a little more often, if that makes sense. So, like right here, we started our we started our downtrend up here and we didn't go and hit the target, right? But I mean, I wouldn't target the whole thing, but you can see how many highs we took, right? We're taking all these highs, which are very, very, very easy targets, right? And I'm not a fucking like professional like mind reader and market maker, so I don't know exactly which high you're going to take, but you can use the discount like I taught you right here, right? Okay, we're entering like a deep discount. We're most likely probably not going to take this high, right? We're probably going to react because that's all the market needed. So, and I'm pretty sure it hit like a fair value gap or something. Yeah, higher time frame order block, which was right here. So it gave reason to have a reaction, right? But the main point of it all is that, if you're entering down here, these targets are going to be hit. Now, like, yeah, fuck it. If you want to hit that shit, maybe, and it might be a bad idea, but like, bro, like, this is like a 700, this is like a 500 point trade. Like, I would be happy with 100 points. Like, it's crazy. Like, you'll be fine, right? And boom, like even down here, right? We kind of just did the same thing. So we started the downtrend on here, and we started the uptrend down here. We didn't really reach it because we went into the discount and we reacted out of the discount, right? As you can see. But then we ended up finishing the sell model anyways because we took the low. So let me turn this thing off. So, okay, you can see down here, this is a perfect one, right? Okay, we started a downtrend down here, or up here, and we started a uptrend right here. So where's our target? Where's our target for our uptrend, it's going to be these highs, right? These recent highs. And these are equal highs as well, so they're very important. So we started our downtrend here. So we want to take this high, right? Boom, boom, boom. We go up, we go up. We take that high. Okay, now where are we looking? Okay, we're starting to form a downtrend, right? We're getting those lower lows, lower highs, right? Boom, 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 boom. All right, you can recognize we're in a downtrend. Where's your target? Right here. Boom. We gap down. We take that, and then we move up, right? And then it's just barbecue chicken from there. You know what I'm saying? Like even right here, this one is perfect. So we start our downtrend up here. Boom. Where's our low? We start a buy model right here, right? Now you're gonna be like, well, how do I exactly identify where a buy model would start? Well, lucky for you, you don't really have to identify that quite yet, because when you work with trends, you let the trend follow, or you let the trend tell you when we're starting a buy model. So we start respecting all these gaps and everything like that. And you can see how we start to respect the higher highs, the higher lows, higher highs, higher lows, higher highs, higher lows. Boom. And there is an advanced concept, but I'm not going to teach you that right now to kind of perfectly figure out where we're going to switch. But that's going to come in a later video. But you can very easily tell when we're switching by looking at the trend and seeing what it's doing and what it's respecting, right? So, but anyways, so we start our trend um, like here, right? Boom. You can tell we started a buy model down here. We have our, where's that little? We have our little curve, right? Our little happy curve. It's like a smiley face. You can very tell that we're switched into a buy model, right? So, okay. All right, where's my target? I entered like here, right? Where's my target, Sean? Where is it? Target is going to be that high. Now, if you're a day trader, I'd probably target this high, this high, this high. But I mean, if you got the bigger balls, go ahead and target this high because it's probably going to hit, right? Now, it's not going to hit every time, but majority of the time it works, right? So, boom, we took that, and you're like, okay, uh, boom, I want to take another good trade. Boom, you recognize we took that high, get back into discount. Where's our target? Boom, right there. These are two trades that are these two trades right here in front of you would have just, if you would have took these two trades, you wouldn't have to trade probably for like the rest of the month, right? Like these are very, very good trades. So, and we're just based off of liquidity and taking those old highs and taking those old lows, right? So you can see it everywhere. I mean, that's just what we do. We start a buy model, we go take where we started a sell model, we start a sell model, we go take where was a buy model, right? And if you can't see it on the 15-minute, go ahead on the 1 hour. It's really prominent on the 1 hour, right? It's so easy, dude. It's so easy. So a little bit of homework for you guys. Just go identify the trends, right? We'll get into how you enter on them and everything, but just go identify some trends, right? Boom, we started selling off here. We're in a buy, and then starting to see where we kind of change trends, right? Boom, now we're starting to respect this, right? Boom. Also, another little hack is it's very easy to see when we switch a trend because this is called a change in the state of delivery. So these are the last these are the last down candles before we come through them, right? So you see how all these candles came through these black candles right there. That's a CISD, which is a change in the state of delivery. And you can use the top of this as an entry, or you can use the 50% as an entry as well, which is what we did right there. Boom, and then we had that reaction. But these show us like kind of where the market is kind of changing direction. Obviously, you want to have like some other point of interest, like here, for example. There should be a reason why you're getting a CISD, but usually once you see this, it's a pretty good indicator that we're gonna go the other way. So that's it. Practice seeing highs and lows as well, especially on the 1 hour, 4 hour, even the 15-minute is good. Um, and happy trading.